Consider a scenario that sounds like a financial thriller. A notorious market manipulator suddenly transforms into the world's most aggressive buyer, while simultaneously, the primary global supplier shuts down the pipes. This isn't a hypothetical exercise. On January 1, 2026, the silver market hit a wall, and here, at the Secret History of Currencies, we are tracking a convergence of events that could rewrite the rules of wealth. For a decade, J.P. Morgan functioned as the ultimate antagonist for precious metals. Investors allegedly using massive short positions to anchor silver prices. They were even slapped with nearly $1 billion in penalties for market interference, but the game has changed regulatory records. Now confirm that the bank has completely flipped its script. Instead of betting against the metal, they've quietly amassed a staggering 750 million annual mining output sitting in a single private vault. While the world was distracted by the bank's old reputation, J.P. Morgan was building the largest private stockpile in modern history. The timing is chillingly precise because on that same New Year's Day, China, new export licensing mandates have been implemented that appear bureaucratic but are actually surgical. Only refiners with massive annual volume and a perfect 3-year paperwork trail can now ship silver abroad. This move instantly disqualified the small and mid-sized Chinese refiners who provide the backbone of the international market. Considering China refines up to 70% of the world's silver, this is just a policy change, it's a blockade. The Secret History of Currencies is watching as the industrial world, from solar tech to medical equipment, suddenly finds its primary source of refined metal cut off. This isn't just a story about two giants making moves. The infrastructure of the market itself is fracturing. In late 2025, the COMEX exchange in New York witnessed a near total drain of its registered silver. In just 4 days, buyers demanded physical delivery of nearly 48 million ounces, 60% of the available stock. The response from the exchange was transparency. It was a massive hike in margin requirements to $25,000 per contract. When an exchange makes it prohibitively expensive to hold a position, they aren't trying to manage a calm market. They are trying to prevent a run on a vault that is running dry. We are seeing a coordinated squeeze where J.P. Morgan holds the metal, China controls the refining, and the Western exchanges are left holding empty bags. The math behind this crisis is relentless. For 6 consecutive years, humanity has used more silver than it has produced, creating a massive structural deficit. In 2025 alone, the gap was 230 million ounces. We've been living on the fumes of old stockpiles for half a decade, and China just walled off the exit. If you re an industrial manufacturer in Europe or India, you don't care about paper contract prices. You need physical metal to keep your assembly lines moving. This is what economists call price inelastic demand. Whether silver is $30 or $300, a solar panel manufacturer must buy it or face bankruptcy. The Secret History of Currencies has noted that the premium for physical silver in Shanghai has already surged $8 above the New York paper price. This backwardation is the market's way of screaming that the paper price is a lie and the physical metal is becoming a ghost. Looking at the technical horizon, silver has spent 40 years building a massive cup and handle formation, a pattern that usually precedes an explosive upward move. With the $30 resistance level finally shattered, the path toward $100 and beyond isn't just possible, it's mathematically supported by the current scarcity. During the last major bull run, silver jumped over 700% during a period of supply surplus. Now we are entering a cycle defined by a supply vacuum. Add in the panic of industrial buyers and the massive long position held by J.P. Morgan, and you have the recipe for a vertical price spike that could dwarf. When the world realizes that a COMEX contract is just a promise that cannot be kept, the rush for physical silver will become a stampede. The smart money positioned themselves years ago, knowing that you cannot mine your way out of a decade-long deficit in a single quarter. The alignment of J.P. Morgan's hoarding China's export ban and the depletion of global vaults suggests we have crossed a point of no return. Stay tuned to The Secret History of Currencies as we track whether this transition ends in an orderly repricing or a total systemic fracture. Mathematics of silver have spoken. The only question left is how high the price must go to balance the scales.